So you've worked 100 hours and you're in the hole $1,500. And that's exactly why you don't want to shoot a $500 wedding. Hey friends, welcome back to my channel. I'm Lori Barbley, an Orlando, Florida-based wedding photographer, and here on my channel we talk about tips and tricks for wedding photographers and aspiring wedding photographers. And today we're going to talk about why you shouldn't shoot $500 weddings. Say you book a 5-hour wedding for $500. That's $100 an hour that you make, right? Wrong. A 5-hour wedding usually turns into about 10 hours worth of work. You've got your 5 hours of shooting the wedding, an hour of driving to the wedding, an hour of driving home from the wedding, 2 hours of editing, and then a lot of miscellaneous administrative tasks. Booking the wedding, doing your pre-wedding call with the client to go over the timeline, things like that. So really a 5-hour wedding becomes a 10-hour wedding, which means you make $50 an hour, which still doesn't sound terrible, right? But don't forget that the government is going to want to take their cut. Now, I'm not an accountant, but a good rule of thumb is to set aside 30% of what you earn for taxes. So if you're earning $500, that 30% would be $150 that you would want to set aside for taxes. And that would leave you with $350 of earnings for 10 hours of work, or $35 an hour. Still not terrible, right? But then you've got your wedding day expenses to think about. Mileage, tolls, and parking are just a few of the things that I find myself spending money on wedding days. So that's going to take away from your $350 of income as well. Yes, those expenses are tax deductible, but it's still taking income out of your pocket. If you pay $10 for parking, you're not getting that full $10 back on your taxes. And then we still haven't taken into account our day-to-day cost of doing business, also known as CODB. What is cost of doing business? Your cost of doing business is your expenses related to running your business that don't tie to a particular job. So for example, for your business, you need to buy a camera. You don't expense that camera per se to one particular job, you use it for all the jobs in your business. So it's the annualized costs like insurance, computers, things like that that you buy for your business and use them overall. So to run a wedding photography business, here are a couple of things that you need that would fall into your cost of doing business. You need 2 camera bodies because you need a backup in case one fails. You need 2 lenses, same thing, in case one fails. But of course you want to have different range, so maybe you'll have the 24-70 and the 7200 lens. You need flashes. You need 2 of them, of course, in case one fails. You never want to shoot a wedding without redundant equipment in case something fails, so of course that's going to bring your cost of doing business up. Then you need memory cards for those cameras, and a computer to edit your images on. And then you're going to want to have 2 hard drives because you need to have redundant copies of the images in case one of the hard drives fails. And don't forget that Adobe subscription that you're going to need to edit those images, whether you use Lightroom or Photoshop. And one of the most important things that you're going to need as part of your cost of doing business that a lot of photographers overlook is insurance. Because what if both your cameras fail at a wedding? Or both your hard drives containing the wedding images fail? You need to have insurance in case the unthinkable happens in your business. So let's just say that all those things put together cost about $5,000 for the year. And that's probably underestimating depending on what kind of camera body and lenses you buy, but we're going to use $5,000 as a nice round number. So if your CODB is $5,000 a year and you shoot 10 weddings a year, your CODB that would apply to each wedding would be $500. $5,000 divided by 10 weddings. You need to make at least $500 at each wedding to cover your cost of doing business for that year. Now that's still not taking into account those wedding day expenses that we talked about earlier, or taxes, or paying yourself. Maybe you shoot 20 weddings a year and that $5,000 cost of doing business becomes $250 a wedding. 250 times 20 equals $5,000. So if you shoot more weddings, your cost of doing business decreases for each wedding. So if you shoot those 20 weddings a year, you only need to make $250 to cover your cost of doing business for each wedding. Let's go back to our original example where you're shooting 5-hour weddings, which are really 10 hours worth of work for $500 a wedding. And we'll say that you're shooting 10 weddings a year. So 10 weddings a year times 10 hours worth of work is 100 hours worth of work. And you're making $5,000 on that 100 hours worth of work. Then you need to set aside 30% for taxes, which is $1,500, which will leave you with $3,500. Then you'll need to set aside that $5,000 to account for your cost of doing business, which leaves you with negative $1,500 for the year. So you've worked 100 hours and you're in the hole $1,500. That's precisely why you do not want to shoot a $500 wedding. You could just shoot more weddings each year to lower the cost of doing business that you need to cover with each wedding. Let's say you shoot 100 weddings each year. At 10 hours a wedding, that's 1,000 hours of work each year. And if you're charging $500 a wedding, times 100 weddings, that's $50,000 of revenue that you would bring in. Of course, we still need to set aside that money for taxes, and in this case, 30% is $15,000 that we're setting aside, which leaves you with $30,000. Your cost of business would still be the same, $5,000. So that leaves you with $30,000 for 1,000 hours worth of work, which is $30 an hour, which isn't bad. It isn't great. It's still 1,000 hours worth of work. Now what if we took those same 10 weddings and charged $1,000 per wedding? That would be 100 hours worth of work at $10,000. 30% for taxes is $3,000, and your cost of doing business is still $5,000. So $10,000 minus 8 leaves you a profit of $2,000. 100 hours of work with a $2,000 profit leaves you at an hourly rate of $20 an hour, which is still more than minimum wage. What if we took it a step further and shot those 10 weddings at $1,500 a wedding? You're still looking at 100 hours of work, and you're looking at an income of $15,000. 30% for taxes is $4,500, and your cost of doing business remains $5,000. So $15,000 minus $4,500 for taxes minus $5,000 for your cost of doing business leaves you with $5,500. A $5,500 profit with 100 hours of work leaves you with an hourly rate of $55 an hour, significantly more than minimum wage and well worth taking weekends away from your family for. So hopefully these numbers have helped you see why you shouldn't shoot $500 weddings. Most beginning wedding photographers don't even think about their cost of doing business and end up losing money their first couple of wedding seasons. You can use the basic format that we've talked about here today and adjust the number of hours you shoot per wedding, the amount you charge per wedding, and do the math to figure out what your hourly rate would be for each wedding that you shoot. For your cost of business, sit down and list out all the equipment you need to shoot weddings. Cameras, lenses, batteries, chargers, memory cards, computers, software, your website annual fee, etc. Cost of doing business is a huge thing that not a lot of photographers think about in the beginning. Will you lose money your first year as a wedding photographer? It's entirely possible, especially if you have to buy all of your equipment from scratch. When I say that your cost of doing business includes things like cameras and computers, that doesn't mean you have to buy a new camera or computer each year. But for the sake of this example, it's something that's important to include in your numbers. And for what it's worth, you don't need to buy the latest and greatest camera every year. Photographers can suffer from something that's called gear acquisition syndrome, or GAS, the need to buy the latest and greatest shiny new toy when it comes out. By doing so, that's going to increase your cost of doing business for the year and make your profits less each year. So yes, if your camera is old and you legitimately need a new camera, buy a new camera. But if you're buying a new camera just to have the latest toy on the market, I would think twice about doing so, because it's going to increase your cost of doing business and you're going to have to work longer and harder to make the same amount of money to compensate for that. Do you have any questions about cost of doing business? If so, drop them in the comments below, and while you're down there, don't forget to leave a like. Make sure to also subscribe and hit the notification bell for new wedding related videos every Wedding Wednesday. Thanks for watching, and I'll see you next time. Bye!